Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Jonathan Ferro, along with Lisa Abramowitz and Anne-Marie Hordern. Join us each day for insight from the best in markets, economics and geopolitics. From our global headquarters in New York City, we are live on Bloomberg Television weekday mornings from 6 to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.
Here's the latest this morning. The Vice President putting some distance between herself and President Biden with Election Day less than 3 weeks away. And new polling from Fox News showing Donald Trump leading Kamala Harris by 2 points. Joining us now to discuss, a good friend of this program over the years, the Governor of Connecticut, Ned Lamont. Governor, it's good to see you, sir.
I see you, John.
Welcome back to the program. She's taking some risks that maybe this campaign wouldn't have taken maybe a month ago. Do you like what you see?
Yeah, take those risks. Go right into the lion's den. Go right there with Bret Baier. Go back and forth. You know, Donald Trump won't even debate again, and she's having a pretty good debate. I appreciate that.
Is it too late, though? Should she have done this interview 2 weeks, a month ago, the week
She's only
after
been
the
a candidate
DNC?
for 90 days. I think she's moving along. I mean, Donald Trump won't go on ABC without suing him, so I think she's doing okay.
So do you think she's evolving as a candidate, then, over the course we've seen since July?
I think so. Everything has been so compressed for her and Tim, but now we're in the final stretch.
So this weekend, you're hosting a fundraiser for Governor Walz, her running mate. Have you been happy with his performance as her running mate, supporting Kamala Harris?
Look, I love Tim. He and I were elected at the same time. All the governors, both sides of the aisle, he's so genuine, he's so real. We like governors, by the way. You know, governors have to balance budgets and live in the real world, unlike these other guys. I think he's going to be a great vice president.
So you're praising some of his work. He used to be, when he was in Congress, a blue dog Democrat, a moderate. As a governor, he's very liberal, legalizing marijuana, licenses to undocumented immigrants in his state. Do you think that, given his record as governor, he was the right choice for a general election when the Democratic Party needed to be seen as coming into the middle, especially after VP Harris's flip-flops from her primary?
I don't know. Legalizing marijuana, does that make you liberal? I thought it was sort of libertarian. I think you see that happening in states across the country. You know, fighting for a woman's right to choose, that's about freedom. I don't think that's particularly liberal. Like I said, he balances budgets, so I think he's got a pretty good balance there. He's pragmatic.
Well, there's a question here about how much the Harris-Walz campaign is really going to reach out to business. And Tim Walz is going to Greenwich, Connecticut, where he's going to be talking with a lot of business people. How are they responding to some of their concerns, whether it's about tax increases, whether it's about, having a viable immigration policy, or frankly, when it comes to antitrust and the ability to understand whether or not Lena Khan's going to remain in the FTC?
I like the fact they're reaching out to business. You know, I think the Biden administration was a little more ideological. I think Harris-Walz are much more pragmatic. I've seen that in crypto. I've seen that in what they want to do with capital gains, not do as much as President Biden. They take the deficit very seriously, as do I. Nobody else seems to. But I think their outreach makes sense, and I'm proud he's coming to Greenwich to tell the story.
Do you have a sense of what they're going to do with antitrust?
I don't. That's not the sort of an insight I have. My instinct is, if they talk about price increases, they worry a little bit about monopoly pricing and pricing power. So probably they'll be, strict when it comes to antitrust.
One thing that you've talked a lot about with us is this question around immigration, and you're talking about how there are people coming to Connecticut that made you really gut check some of the assumptions. Do you think that there is anything further that they can do, the Tim Walz and Kamala Harris campaign, to sort of change the narrative that their immigration policies led to a lot of problems?
I start with the fact that this is a country built on immigration, legal immigration. That's part of our economic strength, unlike other parts of the world where people keeping out. If they had asked me last night what's the difference between you and President Biden, I would have said, Mr. Biden, give me the tools I need to shut down the border to illegal immigration. I think that's what Kamala should have said, and I think that's what she believes.
Why do you think she won't say it? I think this is the problem that people have right now. I'll frame it as follows. You say she's pragmatic. You say they're both pragmatic. Other people might use a less kind phrase. They might say she's a shapeshifter. She just wants to get elected. Untrustworthy. These were the values, the thoughts, the policies of just 5 years ago, and now all of a sudden they're over here. How can we trust them? What's the message to the electorate with that in mind?
Boy, talk about a shapeshifter. Talk about no principles. We're talking about Donald Trump there. Look, I think you know where she stands on these issues. Look, she was a vice president, Jonathan. Vice president's not worth a warm bucket of spit. And so everybody's saying, boy, you were on board with the Biden administration. That's sort of your job as vice president. Now she's been a candidate for 90 days, and I think she's showing her stuff.
But if you think the vice president's job is that important, then how is she qualified for this job if she's running on some of her time in office as vice president?
I think it's a pretty good training ground, don't you? I mean, J.D. Vance stopped by the U.S. Senate for a cup of coffee. You know, she's been front and center as a senator. She's been front and center as vice president. I think she's got the training, the experience she needs to be a really good president.
So some states are already voting. I know Connecticut now, you can go out and vote on Monday. I saw that you said you're going to vote on Monday, get in there early. What does she need to do as really people are already out and about voting? It's not like she has time before November 5th. The time is now. The election has already started.
I'm just urging, look, my friends, I'm a little worried. You know, the guys in sort of finance world that I know, maybe it wasn't so bad under the Trump administration. Maybe I'll sit this one out like Druckenmiller. No way. This is a transcendental vote we've got coming up here right now. I came into office under President Trump. The government was shut down. Remember, every time you didn't get your own way, you shut down the government. You know, then we had COVID, and he said, we don't have a stockpile. You don't have any stockpile. We had to go to China to buy our masks. It was dysfunctional there for 2.5 years. This election is that important. I can't stand people saying, oh, maybe I'll sit this one out.
Let's get into some of the issues. You've got a very low unemployment rate in the state of Connecticut, something around 3.5%. Part of that is because people have been leaving the state. We all want legal immigration. In fact, the former president himself, Donald Trump, in a conversation with us, actually talked about that he wants legal immigration. How are we going to achieve that as a country? It's something that I think a lot of us can agree on. That's what we want. I went through a very long process to be here. I know how difficult it is. How do we make it easy for people to come here legally to fill the job openings that you have in a state like Connecticut?
Well, first of all, I'll challenge your pretext. We have a lower unemployment rate than the rest of the country. It's not because people are leaving the state. In fact, for the first time in a generation, people are moving into the state, some of them coming from New York, and I'm really proud of that fact. How do you keep that economic momentum going? You know, for us, manufacturing, onshoring manufacturing, we have a lot in the defense trade. They're growing. It's a bigger piece of our economy. Fintech and life sciences, sort of the next generation. We had a lot of old industries, Jonathan, right? That was sort of our reputation. No longer.
Yeah, but you're talking about what policies going forward can there be to be implemented that actually can be viable immigration policies. I guess the bigger takeaway is you said that a lot of your business friends and colleagues are on the fence, like Druckenmiller, don't want to vote necessarily, feel like it's an equal chance between the two. What do you think is driving them to feel that way? What do you think is the most misunderstood policy that you kind of want to underscore and want them to understand?
I think for a lot of those folks, cut my taxes is kind of determinative there, despite what it means to the deficit, despite what it means to making investments. Look, you know what I like about Kamala? She's not talking about handing out money to people. She's talking about opportunity. She's saying, with daycare, I'm going to give you the opportunity to start your own business. It's an ownership economy. I think it's a different feel than we had for the last 4 years.
Governor, you're always generous with your time. It's good to see you again, sir. Let's do it again soon. Jon Skelly joins us now for more. Dan, good morning to you.
Good morning, John. Good to see you.
Netflix reporting after the close a little bit later. We won't do single names for you, but the emphasis starts to shift away from the financials and towards some of the media tech-type players. How high is the bar for the rest of the market after what we've seen from the financials earlier in the last week?
Well, we've gotten off to a great start, as you know, in the last week with banks and even seeing some of the consumer plays as well. So the bar is high, Jonathan, and one thing we've been talking about is respecting that rotation since July and August. It has been fairly consistent since then that you've been seeing the value and cyclical sectors responding better to their earnings results.
The tech story's been a mess. I think this week's a fantastic example of that. ASML drops, everyone's spooked. TSMC comes out, everything's okay. Where is that trade now?
It is a mixed bag at the moment. It was the only game in town for 18 months. So you're seeing the broadening out of earnings into other sectors. We talked about financials. Industrials is certainly another place. Materials. Let's see what happens with China, which I know we'll get into, but we're seeing better global growth potentially. So the reality is it is a higher bar. It's a mixed bag. The Magnificent Seven itself has gone almost to like the dynamic duo or the dynamic two. So things have certainly changed.
Yeah, well, you talk about the idea of growth outside of the U.S., and you talk about China, and yet you've been telling people not to buy into the Chinese equity rally. And frankly, it's probably based on today's action, which is one day. It seems to be where the mood is shifting. How much can the rotation continue if all of the pillars don't hold up? You have the earnings, you have Fed rate cuts that people believe will be cutting down the pike, and China stimulus. Can you get some of those fall away and still have the rotation theme?
It's a really, really good question, Lisa. And in particular, we think as it pertains to the U.S. leadership in large cap value, Fed cuts, more confirmation about a soft landing. We've seen that in services, but do we need to see more in manufacturing? Yes, manufacturing has lagged, so that's still to come. And then it's the earnings broadening out. So we think if you have enough domestic drivers, that can still power the U.S. trade. You're not necessarily as reliant on China continuing to follow through with stimulus to get that trade to work.
How excited can you be outside of the U.S., and I'm talking about Europe in particular, if you don't have China cooperating?
You got to pick your spots. I mean, look at some of these countries like Germany as an example that's been entirely reliant on autos for a long period of time. So not only are there cyclical pressures there are structural pressures there with changes in the industry, with competition, new technologies. And so I think there's a lot of more bottom-up idiosyncratic risk to those places than maybe most people discount.
Dan, let's talk about the geopolitical and domestic politics. These risks, you say, are over the market. When you talk about the U.S. election, you say the passing the election will be a clearing event with downside volatility. What about if there's a contested election?
So notably, Anne-Marie, we didn't say election night, so we do subscribe to the fact that it will be more of an election week. So once we get past that week, we do think that it'll be a risk-clearing event. We will accept a winner. And what's notable, and we've talked about it over the last several months, the market continues to climb this wall of worry. We think the election's one component of that. 2 years ago, it was trying to disprove the recession. A year ago, it was what was the path of the Fed? Would they be proactive or reactive with rate cuts? We think the election's the last rung on that wall of worry.
But what if there's a Florida recount issue? What if it's that kind of contested election?
It could certainly be a higher volatility environment, but we do think that it's going to be short-lived.
You can't wait to see the back of this, can you?
Cannot wait.
I can feel it.
Cannot wait. I think we're all in agreement on that, possibly.
Is that wishful thinking? Do you think this is that typical election that once the event is cleared, we're back to business? Or could we see some serious changes to policy that we all need to pay attention to?
Well, it's an excellent point, and not to diminish the gravity of the moment, I think the one scenario that does present the most near-term volatility is that red sweep scenario, which has, over the last week or so, been increasing in terms of the betting odds. Why is that more relevant? It's relevant because in Trump 2.0 with a red Congress, debt to GDP is 30% higher than it was in 16. Interest rates are way higher than they were back then as well. It's a different backdrop. And so the idea of doing all this fiscal expansion, tariffs, extreme trade policy, and potential changes to immigration policy, all of that throws a real wrinkle in this Goldilocks soft landing disinflation thesis.
Dan Skelly, appreciate your time, sir.
Thank you.
Could see some big changes. Dan Skelly at Morgan Stanley Investment Management. Let's get across to Jeremy Stretch of CIBC. Jeremy, your initial take on this, and then I want to get into ultimately what is holding them back from pre-committing to even more, given how dreadful the backdrop is for European growth.
Well, clearly the data backdrop has materially deteriorated since that September meeting. I think you've touched on the PMIs. I think the inflation downturn was obviously more aggressive than expected, although if you listen to the September press briefing, Madame Lagarde tried to pre-prepare the market for a downturn in September due to base effects. But I think it is still this sort of broader negative backdrop in terms of the global manufacturing sector, which really is amplifying the Eurozone downturn, which is warranting easier policy. But the problem from an ECB perspective is the nature of the composition of the council, where you do have a whole range of policy members with very different perspectives. And you still have those very hawkish, biased members from the core members of the European Union, such as Germany and Austria, who are reluctant to sanction a very aggressive easing profile. So that leaves Madame Lagarde with a very difficult balancing act. And so she continues to try and pursue that by this meeting-by-meeting, data-dependent approach. But I think it is still very much the case that we're now moving towards a more sequential policy backdrop. So I suspect that it's going to be a case of the ECB maintaining a data-dependent meeting-by-meeting approach, but I think we're probably going to be heading headlong towards the deposit rate heading towards 2% by the middle of next year.
There's a big wrinkle in that approach, though, Jeremy, and you know it. When Draghi led the ECB, he had to convince the Germans to do things they did not want to do. This time around, though, the German economy is the weak link. And if I'm looking at the euro this morning, here's my question to you in foreign exchange. Should the euro be trading on rate differentials or growth differentials backed up by an ECB that's willing to support growth in a material way?
Well, I think at the moment we're looking at rate differentials. I think we've seen a clear crossover in terms of what's been priced for immediate policy action from the Fed relative to the ECB over the course of the last month. That's really been constituent with this retreat in terms of euro-dollar over the course of the last 2 to 3 weeks. And if we are still going to see the ECB being very much biased, or the market interpretation of the ECB being biased towards policy easing, then that does imply that the euro is going to continue to struggle somewhat. But I think we've got to a situation now where a lot of the real money euro longs, I think, have probably been cleared away. We're looking at a market which is now looking, or increasingly looking, a little bit oversold. So I think it is the case that headwinds for the euro are obvious. The risk of further activity from the ECB is evidential. But I think it may be the case that as we get nearer that sort of 108 threshold, that might be an opportunity to expect some degree of slowdown in terms of this retreat from those recent heady highs of 112.
Jeremy, how much does the ECB essentially have their hands tied as a result of the pace of the Fed? How much do they want to keep the euro in this sort of zone in order to prevent import inflation from really coming into play?
Well, absolutely. The valuation of the euro obviously has an impact via the import price dynamic. So in a sense, you have nominal commodity prices, which will always be evidential for the inflation backdrop. But the euro does amplify that if we were to see a substantial cheapening of the euro. So in a sense, there is a recognition as to what the Fed is doing is relevant for the ECB. But I think the majority of the ECB members will try and look at the policy narrative in isolation, look at that single mandate, as you've touched upon. I think that is very notable, that single mandate of maintaining inflation, and that is how they will pursue policy. But if the euro were to cheapen back to 104, 105, that's not our base case, but if that were to happen, then obviously that would create greater inflationary pressures, and that would prove to be problematic for the ECB policy narrative.
Jeremy, appreciate the update, sir, and your reaction to an ECB rate reduction this morning. Jeremy Stretch there of CIBC.
This is the Bloomberg Surveillance Podcast, bringing you the best in markets, economics and geopolitics. You can watch the show live on Bloomberg TV weekday mornings from 6 a.m. to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.